Okay, today we have with us Danielle DeMarco from Mortgage Line. She's our most awesomest mortgage specialist, and we brought her in today because Bank of Canada again raised interest rates. We knew it was going to happen, half point or 50 basis points, however you want to say it. What it means is interest rates have gone up, but that doesn't necessarily mean mortgage rates have gone up. But we'll talk about that.
For sure, yeah. So, we were expecting an increase.
Right.
0.5%. We were hoping a quarter, but we knew a quarter to a half, just depending on how dramatic the Bank of Canada wanted to be. Turns out they love drama.
Of course
so,
they do.
yeah, 0.5% increase. So what that means is the prime lending rate itself went from 5.95 essentially yesterday to 6.45 today.
Unheard of rates in the last decade. They really are.
Yeah, we went from like all-time low interest rates. So many people are used to that 1.5%, 2%, below 3%, which isn't really normal. And then now we've seen in the last year, when it comes to the prime lending rate, we've seen a 4% increase.
That's what I was going to ask you. Is like how far we got. I've lost track of how much we've grown in the last year in interest rates in this country.
Fun fact, December 8th of 2021 was the Bank of Canada announcement with no increase.
Yes.
And our prime rate was 2.45.
Right.
Fast forward a year later, December 7th, 2022, 0.5% increase. Prime rate's 6.45.
Wow.
So again, 4%.
So that affects a lot of people on variable rate mortgages, not necessarily people on fixed rate mortgages yet.
Exactly.
Variable rate mortgages though, I mean, talk to me about that, because there's been a lot of people that have signed up for variable rates in the last couple of years because they were just so attractive. Like, talk to me about your business. How many people in your business in the last couple of years have signed up on variable rate mortgages, like on a percentage basis?
Yeah, so I would say 2020, 2021 was still a large majority of fixed.
Yeah.
But when we got to 2022, same thing, January, February, still a decent amount of fixed rates. But when March hit, so the last, 8-ish months or so here, majority, I'd say probably 90%, if not more, is variable.
Okay.
Yeah,
okay.
and reason for that is because the variable was now less than the fixed. We saw fixed rates just come up so much, and even though we saw variable increase, the fixed outrose the variable, and so then people went with variable for a couple reasons. One of which is it was a lower rate.
Sure.
But secondly, for home buyers, it was a lower stress test and a lower qualifying rate, which meant they could spend more.
Yeah.
So even people who wanted a fixed rate still went with variable just so that they could qualify for the house price they want.
All right. And so when we're talking about fixed rate mortgages, fixed rate mortgages have actually come down. This is the thing that people don't realize, that just because there is a Bank of Canada interest rate increase, it doesn't necessarily mean that mortgage rates across the board have increased. Like, what are you seeing on fixed rates recently?
Yeah, and super common misconception. Everybody kind of waits for that Bank of Canada announcement. It's all over the media, it's all over the news, and then as soon as it hits, everybody kind of panics, obviously, in recent years.
Sure.
But the bottom line is that there's a variable rate, but there's also a fixed rate. And so while these variable rates right now are increasing, we saw that increase today, we've actually, for the last 2 weeks, seen the fixed rates drop. So from the summer until now, we've come down about 0.5% on the fixed side of things. So for those people who are considering variable or fixed, we're going to see a little bit of a shift, I think, in mindset from some people who are still worried because, could the variable keep going up? Why don't I lock into a lower fixed rate right now?
Right. Okay. Yeah. And that's what people need to remember, is that yes, even though the Bank of Canada raises interest rates, it doesn't necessarily mean the bank is going to sell you a mortgage at that rate. Banks need to make money, so they're going to be competitive in the marketplace, supply and demand, right?
Yeah, absolutely. And supply and demand, speaking of, same thing, is that now that we've seen this variable increase, and I think we're going to see a shift toward fixed.
Right.
Hang on, because while I say fixed rates have come down the last 2 weeks, that doesn't mean that they're going to stay down.
Okay.
So I feel, supply demand, as less demand for variable and more demand for fixed comes in, we're going to start to see the banks respond, because like you mentioned, they need to make money.
Of course.
We're going to start to see them kind of up those fixed rates a bit. So overall trend is still trending upward, but what's important, and this is exactly what you mentioned, is that in between these increases that we hear about every couple months, rates are doing this every week, sometimes daily. So it's important to be, asking questions about fixed and variable, but also, not just assuming that because the Bank of Canada increased it, that all rates across the board went up.
Okay, and so $1 million question, get out your crystal ball. We're going into 2023. A lot of people are wondering, well, should I just sit on the fence and wait? Should I get out there and buy something? I mean, my purchasing power has been hammered because of all the interest rate increases. Like, actually, let's go there. How, on average right now, what would an interest rate hike of 0.5 percentage point, like just happened today, do to somebody's purchasing power versus yesterday?
Yeah, so yesterday, prime lending rate was 5.95.
Yep.
Today, 6.45. That 0.5% increase on average is about $20,000 of mortgage. So let's say somebody was able to qualify for 400 yesterday, 380 today.
Wow.
Again, on the variable rate, not necessarily the fixed rate. Again, fixed rates are down, so we might still be able to qualify, but switching and shifting toward that fixed rate instead.
For sure, because there's all kinds of options. And that's the reason, too, that this market has shifted away from single-family homes being the hottest product, but townhomes and apartment-style condos are actually driving this market right now because they're in that affordable segment as people's purchasing power gets pushed down. So through 2023, what can we expect in your mind and what you're hearing for more interest rate hikes? Should we get off the fence and buy something now? Is now the time to buy? Is it not the time to buy? What are you hearing?
Yeah, I mean, I wish I had a crystal ball, but I'll give you my best professional
Your guess?
opinion.
You know what, honestly, like,
Yeah,
this is what I do to
guess.
people. Like, you know, I'll give you my most educated guess,
That's,
all right?
like
I don't
the word
have the
guess.
crystal ball.
Yeah, I think that even the economists have a little bit of guessing in them
For sure they do.
these last couple of years. So yeah, I would say as far as sitting on the fence goes, don't sit on the fence and don't climb back from the fence. Like, you need to jump over because, you know, I always say this to all of my home buyers, but you're going to regret in a couple years looking back if you didn't purchase. You're not going to regret if you did purchase. Getting into the market, whether it be at a lower price point, whether that's a condo or a townhouse, at least you're in. You're getting mortgage pay down. You're getting, you know, Calgary's trajectory is only up.
Yeah.
So, you know, when we compare ourselves to, you know, Ontario, Toronto, Vancouver's, we're going up. So you're going to build up value, pay down your mortgage balance. That's equity that you have and you've earned, you know, whether it be for retirement or refinancing, or you're going to sell and put some money in your pocket, whatever it may be. Getting into the market is critical. And so I say, yeah, get off the fence and make the leap and bound in. As far as how rates are going to be affected, I think in 2023, what we're going to see, Bank of Canada has another announcement in January.
Yep.
I feel personally like we're probably going to see another 0.25% increase in 2023, but my fingers are crossed that that's kind of it.
Mm-hmm.
This 0.5%, another quarter, and then hopefully there's a bit of a hiatus.
Things start to flush themselves out, normalize. People start to get the feeling that, you know, this is the new normal, or this is how it's going to be for a while, and everybody gets comfortable again. That's also a big thing about mortgage rates and interest rate hikes, is that people start to freak out, like you mentioned. But it just takes some time for them to realize that the sky isn't falling, okay? We just have to realize that this is the new now. And long-term home ownership, too, when you think about it, a mortgage is 20, 25 years long. Over that time frame, you're going to go through points where interest rates are higher, points where interest rates are lower. And you are re-upping that mortgage every 3, 5, whatever term you've taken. There's going to be an opportunity to negotiate this mortgage at some point when you get into the market today. And you can look forward and say, all right, well, in 3 years, I'm going to take a 3-year mortgage now. I'm going to gamble that in 3 years, rates are going to be a little bit lower. I'll pay a little bit more now, but in 3 years, I can get that lower rate again and drive my costs down. I mean, that's part of home ownership. It goes up and down all the time. The water is, you know, fairly warm. You should still dive in.
Yeah, and I mean, that's a great strategy. This is something I've been talking to homeowners about, is that, you know, jumping in, even if you want to take the variable for now, ride it out. We are hoping and anticipating that rates are going to come down in 2024. So what we have a lot of clients doing is taking the variable still, riding out the next year, year and a half, 2 years, and then when fixed rates come down, they're going to lock and convert into a fix because there's no penalty to do so when you leave a variable. So the benefit is you still get the home ownership, the equity build up, but then in a couple years you can lock in hopefully a lower rate. And like you said, ups and downs throughout any mortgage, when you're looking at 25 years or 30 years, you're never always going to be on that downward trend. And something people have to remember too is a lot of new people entering the market, new home buyers, younger people, they don't remember 10, 15, 20
No, they
years
sure
ago.
don't.
Yeah, and so this, you know, under 3% seems to be the norm, but it's really not, in fact, the norm. And where we're at right now, yes, we're a little higher than the norm, but I would say probably rates are going to settle around the low to mid 4% range when we're all said and done.
Awesome. We're talking with Danielle DeMarco from Mortgage Line. Half point interest rate hike again from the Bank of Canada today. You know, overall, it is what it is. You know, if you got to find a place to live, or if you're looking to get into the market, it's not a bad time. Like you mentioned, Calgary has a very bright outlook. There's an equalization in Canadian real estate happening. The major markets are coming down. Calgary is staying fairly flat. We're anticipating it will grow a little bit in the new year as far as total, as dollar values go, and as far as sales go. There's a lot of people moving here. So we really appreciate you coming in today and giving us your insight. If people want to talk to you more about mortgages, how do they get a hold of you?
Yeah, they can email me, Danielle@DanielleDemarco.com, or they can reach out to you and you can pass along my contact or information as well.
Awesome. And ours is always krgroup.ca. It's our website, and you can call or text us anytime on our office line. It's 403-207-1748.